For gold, the price tumbled on Friday to near a 5-month low. Here to discuss is Peter Schiff, the CEO of Euro Pacific Capital. Peter, thanks for hanging with us. I know you were waiting there for a while. We appreciate it. For gold, that $1,300 price range was there for a long time. We kept seeing it for many months. But now, after Friday, when the price declined to $1,251 per ounce, its lowest since July, many are questioning whether any upward momentum is in sight. You know gold well. What's your take?
Well, you know, the last few years you've seen gold sell off at the end of the year and then rally pretty strong in the new year. Because what happens is towards the end of the year, people get very optimistic about the future. Oh, things are going to get better. Growth is going to pick up. The economy is going to take off. And so they get optimistic. They buy stocks. They buy the dollar a little bit. They sell their gold. And then the new year comes around and the hoped for rebound doesn't materialize. And then they buy the gold back and the dollar sells off. And that's, I think, where we are. I think there's a lot of misplaced optimism out there surrounding the tax cuts. You know, the Fed's supposed to raise rates on Wednesday. They probably will. So that rate hike has been supportive of the dollar and has been hurting gold. But once that rate hike is in the rearview mirror, I think gold will react the same way it has to the prior rate hike. I think it's going to go up. And I think the dollar is going to have a very bad year next year. I think this is the first year the dollar's been down in quite some time, but I think it's the beginning of the next major leg down in what has been a long-term dollar bear market.
Okay, you piqued my interest with several things there. So, first of all, about the holiday time, the end of the year when people are optimistic, you're saying, Peter. Is part of that do we see part of the price of gold seen in the purchase of jewelry, or is that just a minor part?
I think that's a minor part of it. You know, last year it was the optimism over Trump, right? Trump had just gotten elected and everybody thought, oh, this is going to be great. He's going to make America great again. We're going to get rid of, you know, we're going to shrink government. We're going to cut regulations. We're going to lower taxes. And so early in the year, it turned out that that wasn't the case. And, you know, now all of a sudden we're getting excited again because we're talking about tax cuts, but we're not talking about shrinking government. And as long as government gets more expensive, we have to pay for it. And if we're not going to pay for it with taxes, we're going to pay for it through debt and inflation, and that is what we're going to do. And that's going to be a more expensive way to pay for government than the taxes.
Okay. Now, just for our viewers who aren't following this like you do, Peter, give us the 52 weeks on the highs and lows for gold in the last year, or at least the range.
Well, gold did get up around 1,300. I think it actually broke through it a little bit, but then it pulled back. But you know, it did get lower. It got down, I think, even around 1,200 earlier in the year, and that's kind of been the range. Yep. But, you know, I think that we bottomed out. Remember, gold bottomed out at 1,050 in December of 2015 when the Fed first raised interest rates, and everybody thought gold was going to tank when the Fed started to raise rates, and the first rate hike marked the bottom of gold. And since then, I think we've been building a base, but eventually we're going to take off, and we're going to take out the high from 2011, which I think was around $1,900. So once we really get through 1,350, 1,400, I think we'll have some clear sailing for much higher prices.
Do you think that with the sort of accommodative monetary policy, and you're talking about the Open Markets Committee, the Federal Reserve's committee that meets on tomorrow, on Tuesday and Wednesday, and everybody is suggesting that they will go ahead and raise rates on Wednesday. Do you think that's already been baked into markets and also the price of gold, or do you think investors are still going to take some action Wednesday after the announcement and the rest of the week?
Well, I think what's been priced in is the fact that so many people believe that all this loose money can be withdrawn, that the Fed can reverse the policy or other central banks, that they can normalize interest rates, that they can shrink their balance sheets. None of this is possible. That's what the markets don't get. The cheap money of the past is going to be even cheaper money in the future. The Fed is going to have to abort the tightening. They're going to have to go back to zero in the next recession, which could happen a lot sooner than people think. They might even go negative. They're going to have to launch QE4. It's going to have to be bigger than 1, 2, and 3 combined. When the markets figure this out, then it's a whole different game. And then, then you're going to start to see much bigger moves up in the price of gold and in other commodities as well. And that's when you're going to start to see real downward pressure on bond prices, when people realize how the central banks have lost control of this and that they have no ability to reverse course.
And I assume that statement about sort of the loose monetary policy isn't just about the Fed. I mean, it's the European Central Bank and the Bank of England. I mean, it seems like most of the central banks around the world have a fairly accommodative monetary policy right now, and that feeds into what you're saying, correct?
Yeah, everybody does, but ultimately I think the Fed is going to be the easiest, and that's what's going to catch the markets by surprise. We've got the most debts, and we can't sustain them ourselves. We have huge trade deficits in addition to our budget deficits. We have no real domestic pool of savings. We rely on the savings generated in Asia and other parts of the world. So we have to borrow money from the rest of the world to buy the products that the rest of the world produces. So we have these twin deficits, and I think America, more than any other country, is completely addicted to this cheap money. So while other countries may be able to raise rates, we're stuck. We're going to have to keep them lower longer than anybody else.
When you said that about debt, I read something earlier today, and I can't source it, but I really read it. It said that the tax bill would equal $8,000 of debt per household. And it's so ironic because traditionally, the Republicans, and for all my life, has been such deficit hawks, and this is adding to the deficit. Do you think that's going to have, just if we run it up the deficit, that's really going to have a longer-term impact on precious metals, Peter?
Well, the Republicans are only deficit hawks when they're out of power. Whenever they're in power, right, then they don't care about the deficit. See, the Republican version of a free lunch is tax cuts for everybody, but they don't want to cut any government spending. So they only oppose government spending when it's the Democrats who are doing the spending. But once they're in power, they just want to spend as much as the Democrats. So it's all a bunch of politics. It's a theater. But yes, it is all going to benefit precious metals, because when the government decides to pay for its spending by printing money and borrowing money rather than taking it from us in a more honest manner, like taxes. So when the Republicans cut our taxes, but they don't shrink the size of government, when government gets more expensive and they reduce the revenue to pay for it, then where do they get the money? We don't get all the government for nothing. So they have to create the money. They have to print money. The Federal Reserve has to print money to buy the additional bonds that the Treasury has to sell to replace the tax revenue they lost. And that diminishes the value of the dollar. That causes prices to rise. So the way the government gets our purchasing power is through inflation. So instead of taking our money away from us, they leave us the money, but they take the value away from the money. And higher inflation is bullish for gold.
You explained that very well. Thank you for that. I know our viewers appreciate it. Now, I can't let you go without getting into silver. Silver also dropped just about 50 cents on Friday at COMEX, the commodity exchange in New York, to $15.47. What's the latest on silver, and where have we been on that? What's been the year-over-year range on that, too, Peter?
Well, it's the same thing as gold. It's got the same end-of-the-year problem. You have all this optimism. The Dow is hitting new highs. People are excited about it. And so, you've got a little bit of a profit taking. They used to refer to silver as the poor man's gold, but now they've got something, I guess, even cheaper, the cryptocurrencies. You've got a lot of people. I got a phone call today from a delivery truck driver who called me up saying he wanted to buy some Bitcoin. I didn't even know how he got my number, but he thought he just was looking. He was from Jamaica, he just wants to buy Bitcoin. I told him, look, I'm not a Bitcoin salesman. We're a brokerage firm. I told him, what to do. But so instead of looking to buy silver, you got people buying some cryptocurrencies and just spinning the wheel in that casino.
Yeah, and look, I do get concerned. I'm not a money advisor or anything, but I've heard people talk about, mortgaging their house to invest in Bitcoin or taking out of their IRA, and boy, I sure wouldn't do that. I am reminded, Peter, look. Go ahead.
Yeah, I'm just going to say, look, this is probably the biggest bubble I think I've ever seen, and I've, witnessed quite a few in the short period of time that I've been around. The Fed, central banks have kept money very cheap, and so they've inflated an abnormal amount of bubbles. I mean, this is not a coincidence that we have all this cheap money and we have all these bubbles. But, Bitcoin keeps going up. I mean, 17,000 today, and look, how big can the bubble get? I don't know. I mean, I'm not that smart. I'm smart enough to know it is a bubble, but I'm not smart enough to know where the peak is. But there's an old saying, right? Bulls make money, bears make money and pigs get slaughtered. And there are a lot of Bitcoin pigs, I believe, who are going to get slaughtered. So if you happen to own some Bitcoin and you bought them and you have some profits, sell. Now, I'm not saying you have to sell everything. You don't have to take it all off the table. You know, you can play with some of the house's money. But, you know, take some money, buy some gold, right? Take some of your windfall and put it into something real. Because when the bubble stops and all the paper profits vanish, you want something more than memories to show for it. You just don't want to talk about what you could have done, what you should have done, and what you would have done. Yep. Right? Take some of those paper profits, turn some of it into gold, maybe buy something with it. Buy yourself, you know, something that you could enjoy. Don't let the house take it all away. Because that's what's going to happen, I think, to a lot of people. They get emotionally involved in this bubble. They think trees are going to grow to the sky, and they're not. This is no different than any other bubble, except maybe it's more irrational than most.
Thank you, Peter. Got a bolt here, but thank you for that good investment advice. Thank you a lot. Peter Schiff, CEO of Euro Pacific Capital. You have a great day. Take care. Thank you.